This is Bill Hornbarger, Chief Investment Officer with Benjamin F. Edwards, with three things to watch for the week of November 6th, 2023. Well, after a very busy week last week, this week is a little bit lighter on the data front. Probably the most important and closely watched report will be the University of Michigan Consumer Sentiment Survey. And in part of that, we get inflation expectations, both short term and long term. Longer term inflation expectations, defined as 5 to 10 years, have been stuck around 3% for the last several months in this report. And that, again, remains above the Fed's stated target level, closer to 2%. Interesting, shorter term inflation expectations really took a spike in the previous report last month. Based on higher gas prices, which would be a headwind for consumers, they were up around 4.2%. And again, that's well above the Fed's comfort range. Inflation expectations are almost as important to the Fed as inflation itself because it does drive consumer activity, something the Fed watches very closely. And again, if those inflation expectations don't start to come down, along with inflation itself, the Fed is going to remain vigilant in leaning into tighter monetary policy. We're also going to get the Fed's senior loan officer opinion survey this week. Not one that a lot of people pay attention to, but I think it is going to be worthy of comment this week. In the previous report, this comes out quarterly. In the second quarter, senior loan officers talked a lot about tighter credit conditions in the second half of the year. And a lot of people think that's one of the reasons that, coupled with overall tighter financial conditions, higher bond yield, stronger dollar, that the Fed was relatively dovish and made no move last week at the FOMC meeting. And if credit conditions do tighten, if loan officers do tighten credit conditions, one would expect that to have a negative impact on consumption in the second half of the year. So I'm sorry, in the fourth quarter of this year. So something we're going to watch very closely. And then finally, we're finishing earnings seasons. About 400 of the S&P 500 companies have reported earnings for Q3. 81% of the companies that reported have exceeded expectations. Earnings expected to grow about 5.7% for Q3. That's one of the reasons that we think that the market performed so well last week, coming in ahead of expectations. And one of the things that we'll pay close attention to, but a nice underpinning for equities in the rally that we saw at the end of October.